Hey traders, checking out of the stock market today. We started weak. The bulls aggressively bought the dip, but we faded into the close with some profit taking. We have a key resistance level that is the line in the sand for me in the short term. Let's check it out. So we started the morning, pretty much this was pre-market on the S&P 500. We changed the hourly trend into a very significant amount of follow through. So full bull control on the morning. And there was a pivot on the morning where everything changed for me because I'm sitting there watching the open and we had all of our major sectors up at the high of the day. This was taking place in the first 15 minutes of trading, but XLF was not joining and it was clearly holding us down, and everything changed once XLF joined. And once XLF hit its high of the day, that then had all of our major sectors at the high of the day at the same time. And that happened at 9:50. And you can see that's when the bulls really took off and saw a significant amount of follow through. So it was a very strong start to the morning. And what the S&P 500 bulls were able to pull off, and the NASDAQ as well, is confirming the 12-hour inverse head and shoulders that we were talking about in yesterday's video. So the 12-hour consolidation started, we held the low, and then we broke resistance. But we only broke one resistance level. We broke the right neckline. We did not break the left neckline, which is the high of the FOMC bounce day. And it is also our daily lower high. If we do not break that level, we remain in a daily downtrend. If we break that level, then a weekly bounce is going to be looking to shape up. And that's as simple as I am leaving it right now. So we sold off into the end of the day. The S&P 500 hit a new high of the day with no follow through. What was the red flag? The NASDAQ did not hit a new high of the day. Again, whenever one does one thing, the other has to follow. And if the other does not follow, don't expect follow through. Any direction, either name. If QQQ breaks resistance and SPY does not, QQQ is not going to go very far. If SPY breaks support and QQQ does not, SPY bears are not going to go very far. So that's always a nice guide for me where it keeps me in check from getting faked out a lot if you were watching a move where one of them does the thing and the other one does not. So QQQ ended up failing the high of the day, setting an hourly lower high, and then rolling over into the close. And so we ended on a weak note. And if we look at SPY on the daily time frame, we can see anything under 382.25 is just a lower high. We came about 1% away today. So it's not game over for the bulls, but they still have proving to do. And we are currently weak. We have a potential hourly head and shoulders here. If we were to bounce right now, we'd have to be cautious of the lower high and lower low. So tomorrow's a pretty important day for me because if it's a red day, that's going to put some decent distance between the price and that key line in the sand resistance level. If it's a green day tomorrow, we're going to be testing that resistance. So that is important in the short term. So the NASDAQ, same deal. We broke one resistance level. We rejected from the second. We got very close to it, but that shows me a lack of follow through. You got to take out both of those levels for follow through. And we didn't. We pretty much double topped on the NASDAQ. And if we look at QQQ, that level was 286.28 and we got up to 285.18. So a little more than $1 away. Not game over, but not the kind of close the bulls want. Upper wick. These closes show nice strong momentum right up near the high of the day. And these show upper wicks of profit taking and a lack of conviction into the close. So bears are still comfortable as long as the daily lower highs remain, is what it all boils down to. Semiconductors, we knew they were further from resistance. So semiconductor bulls not doing anything at this point. 4 hour, trying to shape up an inverse head and shoulders, but that's it. That's the only hope that the bulls have would be to break 214.31. Again, just the daily lower highs, keeping it nice and clear. If we keep setting daily lower highs and do not break them, bulls don't have, bears don't have a thing to worry about. Tesla, upper wick. Talked about in the video yesterday how I'm watching for the potential of just tightening 2-day ranges into next week on names like Tesla and like Google. Google's another one where anything under 2387 is just a lower high. So both of these names still have, you could say they're still hourly uptrends. I mean, Tesla had a weak little bounce that rolled over, But if they're red tomorrow, that is certainly going to solidify our confidence that we're remaining range bound likely into next week. And again, it's another one where the burden's on the bulls, obviously, where if we can't break resistance, we're not going anywhere. Healthcare performed again. Second day in a row where it stood out as a lead bull. We've seen a very significant bounce. The retracement from this drop is impressive, certainly comparatively. So we saw a 55% plus retracement on this bounce. And just as a comparison, if the S&P 500 were doing the same thing, we would be a lot higher. Right now, the S&P 500, if we had the same bounce high, it would have been another 5% to the upside. So XLV is creating space. We broke the daily lower high resistance. And now we have space where when we top out from here, bulls have space to try and hold that higher low compared to 118.25 to eventually attempt to shape up a trend change. The names that we just looked at, maybe aside from Tesla, but everybody else, our ETFs, have not bounced enough to create space for a daily trend change attempt. XLV has. So it's a big difference. That's why all bulls are looking at XLV and saying, I hope my name does that. I hope we break the daily lower highs and get some bounce follow through. But not yet. XLF still weak. Pretty much a double top with the high of yesterday. We only broke it by 2 pennies. Same deal. If we cannot get over 31.92, bulls are not going anywhere. Bears stay very confident. It's looking like we're going to end the week with inside bars on a lot of names. Not XLV, but semiconductors inside bar, QQQ weekly inside bar, S&P 500 weekly inside bar. Still 2 trading days to go. But unless we get some significant volatility within the next 2 days, inside bar, if it forms, then we would have to break it bull for a weekly bounce to then be underway, for us to then scout weekly lower highs. Again, I am keeping an eye out for weekly bounces to shape up, but certainly not getting aggressive. I do have a little bit of a bull lean because, honestly, it's because of crypto. Looking for weekly bounces in the crypto space because of how smashed we are and the amount of volume we saw at those lows for potential climaxes. But again, just a loose bias. And I actually made more shorting today than I did going long. We'll go over some trades I took today if I can remember them at the end. I'm sure I can remember them. At least some. Biotech sector did get followed through as well. 74.67 is the level. Again, there's money coming into the biotech sector. That much is very clear. And the weekly time frame, if we reject from 74.67, it'll be the same two-day pattern, where if we don't break resistance, we remain tight. But out of names that are in tightening 2-day patterns, the biotech sector is clearly the strongest name out of the last 3 days. It's getting a lot of people's attention, certainly myself included. This was a frustrating one. I was live streaming this morning. I literally had a buy order filled out on LABU. Market order. I just need to push the button. And I was watching XBI, and I knew I wanted a bottom fishing play. I said, okay, we're opening weaker. We're going to test the low of yesterday, 68.66 first thing. I'm going to buy based off of that support level. And so I'm watching it, and I want the price to get a little bit closer to decrease my risk for that trade. You know, I want to get as close to support as possible so that if I stop out, it's a very small loss. And so I'm sitting there with my finger on the trigger, and look at how this played out. We're pulling back. These are 5-second candles. So we're pulling back. We hit the new low of the day. I say, okay, I'm getting ready. And I look away. Literally, I look away for a second. This is where live streaming sometimes throws a wrench in the game plan. But I look away for, let's say, 15 seconds. And by the time I look back, in this 5-second candle, the price shoots up 0.5%. And in 10 seconds, we're up 1% off of the low of the day. Granted, if I had chased at that point, it would have still worked out. But that was just me going, wait a minute, what just happened? Speed, massive amount of speed where we just went, voomp, 1% higher in 10 seconds, and it just left me in the dust, which was very frustrating because that was a week maker very quickly. I would have had to have held it for 5 minutes to be a week maker, a little bit longer. 15 minutes would have been a week maker, and it just went up all morning. So it was frustrating. That's not the right day, but it did go up all morning. And it got to the point where, again, I feel FOMO. I felt FOMO watching that, but I didn't act on it, and that's the key. And again, I could look in hindsight and say, oh, well, I should have acted in FOMO, but this is one example out of 100. And if you pull up all the other examples, I would certainly lose plenty more times than I would win if I were to chase that move for a day trade. So the trade came to me. It was just much too fast for me to act on. And that led to a little bit of frustration. But I shorted it, and then I longed it, and then I shorted it. I traded it a lot in both directions. It actually went really well in both directions. So I don't remember my exact entries and exits, but I did play this pullback. I did buy off 5-minute EMA 12. I did short it on the lower high. The end of the day, I tried to long it here, looking for a 15-minute higher low. And as soon as I stopped out, I was just staring at it long. I wanted the long direction. And I was watching the S&P 500 show some weakness, and I stopped out for a half-day loser. At that point, I was up, 4-day maker, so that was fine. But as soon as I recognized that, because I was staring at it, relative weakness, we are much weaker than SPY. As soon as I stopped out long, I went right into a short. And that ended up getting back that half-day loser because of the significant bear follow-through that we saw from there. And so that was a win for me because I don't often instantly flip to the other direction. I'll often have to take a step back and then wait for something to shape up. But in this instance, knowing that the end of the day was coming, and knowing that we were seeing a lot of relative weakness compared to the S&P 500, again, XPI divided by SPY, look at this end of the day drop. End of the day drop. Come on, TradingView. It's like it has to do these calculations. There we go. So rolled over with a relative weakness. And that was one of the most significant periods of relative weakness on the entire day. But the biotech sector, you got the hourly uptrend as our guide. When we lose the hourly uptrend, if we lose the hourly uptrend, that will be the lower high compared to 74.67. So tomorrow's a pretty important day as to whether or not we are going to reject from that resistance level. NEE is a name I'm keeping an eye on. This one is one where you have your known names that you track. And all right, every day I'm checking in on this name. And this is just one that I've been aware of for a really long time. My dad used to work there in his retirement, has significant holdings, and so I've been following it, and I've wanted a long-term entry because if you look at the 2-month chart, it's been a pretty good stock over the years, and it does dividends. But man, I just can't keep my eye on it. I don't know what it is. It's like I forget to look at it for 4 days, and then, oh yeah, I should keep an eye on it. But anyways, I'm watching this weekly tightening range, and this most recent time that I should have been keeping an eye on it, it was looking for a playoff of 66.84. And we went from 70 very quickly to 75. So I really like the tightening pattern here. We've got a bunch of supports touches, plenty of resistance touches, and I would like to see this tighten up for another few weeks, bounce into another weekly lower high, another higher low. Earnings might screw it up in terms of getting really tight, and then earnings dictates the break. But this is just a pattern that I'm keeping an eye on. This is in the utility space, NEE. Dollar. So dollar broke its 12-hour equilibrium bear, but what did we not see? Follow through. It's the exact inverse to the stock futures. We broke one level, we did not break the second level. Same thing with the inverse head and shoulders on the 12-hour futures charts. So keeping an eye on that, because if the bulls turn right around and take back over, that will certainly be notable. The US 10-year confirmed the daily downtrend. And again, for me, I look at that and say that's a weekly continuation move straight into consolidation. That's my initial indication to watch for bulls tiring. So we're in a little daily downtrend, but stocks are not in an uptrend. And I'm watching the VIX tightening weekly range. A lot of people like to say, you can't chart the VIX, blah, blah, blah. And I understand why they say that. But when you give me a clear equilibrium, which is a pattern that I have traded 65,000 times in my life, I can utilize that information. We just had one on the daily that gave us information. And some people laughed at me when I talked about this daily equilibrium. But it broke bear on May 26th and SPY on May 26th. Went up. I just had a complete brain. It's like, wait, shouldn't we be going down? No, we should be going up because the VIX broke bear. Thought I just had a real bad example. So 2-day, that was a big bull move. Look at that point in time, the S&P 500 was doing exactly what it's doing now. We had a daily lower high. We had a lower low, not much follow through, a little bit of a bounce, not very meaningful. Bear flag, confirmed, not much follow through, a little bit of a bounce, not very meaningful. And then a big 2-day bull move. And where that came out of nowhere, well, if you're watching the VIX, you were definitely looking in the bull direction of the markets. Because the VIX broke the equilibrium bear and followed through a good bit. So back to what I'm talking about, the weekly is now very key for me because this has been tightening up for months. Currently an inside bar. If the inside bar breaks bear, our weekly lower high is set, and then 2374 is a key level. I'm not trading the VIX based on any chart patterns, but I am applying it as clues to the broader market. And this is going to break sometime within the next probably 5 weeks or so. And that's going to be significant for me in terms of direction. When's the last time the VIX was in a multiple month weekly equilibrium? You're going to be hard pressed to find it. I'm sure it's happened not too long ago. Here was a good one. Right before the CVID wildness. But we tightened up for a few months there. A couple months. What else? Energy, still very weak. Broke to a lower low. No bear follow through, but certainly no bounce at this point. And that's with oil. Oil's top is in for now. Whether it is the top, certainly can't say. But maybe, you know, it'll be something like last time. We pull back, we find a support, we trade sideways, tighten up, and then get a bull break. But with how much we have pulled back, we know the top is in for a while. We would need a 20% move to head back to higher highs from here. The key for me is, do we hold weekly EMA 12 by the end of the week, or do we close below it for the first time in 2022? I look at the monthly time frame for US oil. And let's go back to that contract. CLQ. So yeah, wouldn't be surprised to see monthly consolidation in oil. I know there's a lot of headlines at play, but bears clearly taking over the last week plus. We know natural gas has dropped hard over the last week plus, so energy commodities certainly cooling off. Natural gas looks a lot more toppy than oil does, but again, natural gas led the way down and oil has followed. June 14th was the big clear day, and oil did not have its big clear day until June 17th. Gold's not doing anything. It's within its range, not even worth looking at. Gold and silver, both range bound, nothing changing. Crypto's still weak. Crypto was notably weaker than stocks today, which is not good for bulls, and it's great for bears. And so we head into tomorrow with our clear line in the sand level, knowing that if we do not break the high of last FOMC Wednesday, bulls don't prove a thing, and we'll be watching for the potential of fresh lows to be on the table. We're either going to break the daily lower highs and get a weekly bounce going, or we're heading back to the fear lows. I hope you're well. I did short another name today, CMPS, Psychedelic. Why did I short it? Just because it was really clear. I'm looking for a weekly pullback. We're testing weekly EMA 12. The daily has been performing well in this market environment, but a bull break yesterday with a big upper wick. And when I looked at the chart today, we had this morning move and we were under the high of yesterday. All right, well, that's a very low risk top fish. So shorted it at 1071, stop at 1101, and then I exited a third of that position towards the end of the day at 1031, I think. So now my break even, math, 1091 break even. And I'm going to hold it for a swing just because if the broader stock market does roll over, you know, I'd expect to see a 10% drop on this more volatile name. So that's a bear swing that I'm in. And that's that. Do good things. Hope you're well. Think I'll do a video tomorrow. We've got the Chart Guys meetup in town, so going to be real busy the next few days. Looking forward to lots of fun. Cookouts, hikes, waterfalls, Papadosio show, shrimp and crawfish boil, smiles, lifelong friendships, good things. Some bee balm. Milkweed doing its thing. These are a bunch of things from years past that I didn't plant. These are all toothache plant. Numbs your mouth if you eat the leaves or the flowers. This is a tomatillo that was planted over in that bed last year. And this is what was here last year. This is some kind of salvia. Some kind of peach colored lily. This is a dahlia that's not flowering yet. These lilies are about to start flowering. Trellis is all stained up. Planted the 2 wisteria. And we got the kiwi climbing in the back. Now I'm going to string up some LED lights. Make it pretty.